we have got to talk about what's going on in the markets. Plus, I have some stocks towards the end of the video to share with you that I think are absolutely worth checking out. I am Dr. Stock, a doctor of education, and I went to the store the other day to buy a birthday balloon. I said, how much is that balloon? The cashier said $2. I said, all right, I'll take it. Can you blow it up for me? He says, absolutely. Blows it up, hands it back, and says, that'll be $10, please. I said, $10? I thought you said it was $2. He said, sorry, man, inflation. Inflation, that was one of those like funny, not funny kind of jokes because it's a little bit too real, maybe even too soon. Because man, those prices are absolutely rough. I've remarked before that our grocery bill used to be dwarfed by our mortgage payment. And we don't have a high mortgage or an extravagant house or anything like that. But still, that has switched. My mortgage payment has pretty much stayed the same. But my food prices have now outpaced by about 25% what our mortgage costs are each month. And oh man, to feel that pinch, it never feels nice. Let's move on about the markets, but inflation is important to remark on in this. We have a little bit more data coming out today, by the way. Actually, let me switch this up to this month because I want to bring up yesterday as well. So yesterday, when we have PMI for manufacturing, the ISM manufacturing PMI showing 48.7. So anything below 50 is contraction. So seeing that manufacturing PMI dip below 50 shows signs of contraction. The market did not like that. I can show you when we look at the charts for SPY yesterday, intraday, right around that 10 o'clock hour, we started pulling down. We sold off all the way to about midday and then recovered, but not quite as high as what we started. And so that's something important to pay attention to, that we're getting this news and information coming out right now. And also today, logistics managers up 55.6, so a little bit of expansion there as well. That kind of somewhat contradicts what we saw, but ISM is going to be more important there. Redbook year over year coming in at 5.8, so that's same store sales growth. Year over year numbers that we're looking at for June, 5.8%, down a little bit from the 6.3% that we saw in April. So now mind you, that 5.8 is still a strong number. Basically, we need to see Redbook numbers come in positive, and it's really only when we get into recessionary periods that we really start to see that dip into negative territory. So we might have a little bit of fear as that would shrink, should it continue to shrink down from where it's at right now as it gets close to zero. And as we start to see it go negative, then that, like I said, could be a very, very big recessionary sign. So we'll be watching for that over time as Redbook plays out. We'll get Jolt's report coming out soon. And what we're going to watch for that is actually a combination between what exactly is happening with the jobs opening, or do we see fewer jobs open right now? And then also combine that with what we get on Friday with non-farm payrolls. We get the unemployment rate coming out as well at 8:30, currently at 3.9%. So if we see the JOLTS openings decline and we see the unemployment rate go up, that's going to be a really big combined catalyst to put downward pressure on the markets, in my opinion, because that is very recessionary. Now, the other thing that we have going on is, let's move forward to the inflation measure, which comes out on Wednesday of next week. So not tomorrow, but the following week. And so we'll get that CPI report. And then a few hours later, as I mentioned in yesterday's video, the Fed interest rate decision likely staying about where it's at right now. And then also the FOMC economic projections. And then the Fed conference at 2:30, Jerome Powell coming out and talking to everybody. So PPI following the next day, by the way, but I'm guessing that Jerome Powell is probably going to have access to that. The Federal Open Market Committee is going to have access to that information prior to the public having access to that information and probably taking it into consideration with how they proceed. So just a quick note on that before we get into the charts. So with what we're hearing from the Fed right now, of course, they have to sound like they're standing firm, battling inflation to the best of their ability to ensure stable prices and maximum employment. They keep on remarking labor market tight. They do see some signs of loosening, and the forward-looking indicators are showing that what they're doing is working. So for financially tight conditions, as they say. And to me, this isn't necessarily going to be a precipitous thing that's going to play out over time when it comes to the markets. That's going to be a very sudden thing that happens in the markets whenever that happens in the markets. And I think that we could see it between now and election time, possibly, maybe even out into 2025. We're going to have to watch for that. So 3 to 6 months, we should see some sort of weak period. I don't know if we get any major sort of sell-off. We got to pay attention to the technical indicators if that's going to tell us anything to do with timing, whether we're bullish or bearish on the markets. And so with that said, I want to jump over to the charts themselves just to see what's going on with TradingView. There we go. And I just want to make sure that's displaying correctly for us. There we are. Perfect. pop that up there. So here we're looking at SPY, and yesterday actually opened up pretty well, but then closed lower. And I said that we would look intraday at about that 10 o'clock time. So let's move to the 5-minute chart, and we're going to zoom. We'll reset the chart view. There we go. And you can see right about here at about 950. So leading up to it, not so good. And then this long tail that you see, top tail in the candle, signaling that we could possibly drop down following yesterday's ISM manufacturing PMI. So watching that, sold off, and then we also found support down here about 22. And then if we zoom out from there to see what happened, we did not return to as high as up as we were before. So near term, we could be seeing a little bit of weakness coming into the prices in the market. We're going to have to watch that data as it comes out. And mind you, you can see the declining momentum even on the 4-hour chart. So we'll see what today brings, those economic reports that we get, and whatever Jerome Powell says. I said these next 2 weeks are going to be absolutely critical, and I'm still of that same mind that they are absolutely critical to watch and see what's happening in the markets. So near term, looks like we might have some more weakness, but it can be impacted by any number of catalysts that are out there. I think now's a very troublesome time to try and play any options on the markets themselves, besides maybe some volatility plays that might be out there. Or if we're going to continue to kind of trade sideways in market times, maybe we want to do something that would be a lower volatility move until we see that bigger direction come in. But for me, this is one that, at least as far as options goes, that I'm sitting on the sidelines on the indices themselves. So moving over to QQQ, you can see very much the same thing. I could show you the intraday chart. It's going to show you pretty much what we saw with SPY. Not a lot of change there. Bitcoin had a bit of a rally yesterday, and I have adjusted this trend line up a little bit from where it was at. We peekabooed right up above this. Matter of fact, we can even move that up a little bit more to say that we'd need to clear these previous tops that we see to have more upward momentum on that. Now, mind you, it's about momentum. The RSI is moving back up. We didn't drop down below 50, so we're still up above 50. And we opened at this trend line support yesterday, and we're still in between there. We don't have clear sign of moving up or down, so bullish or bearish on Bitcoin in the near term. So for Bitcoin, we really need to break this top that we saw over here. So far not happening, but we do still have that trend line support going for us. And until we start to see us break down below that, which would be a bearish sign, which, mind you, we have the 50 EMA and SMA just below that, we don't really have a clear indication of the next direction for Bitcoin at the moment. But we do want to keep an eye on that. Right now, we have tapering volumes going all the way back from May 15th all the way up until now, although we did have a nice volume spike yesterday. We did sell down significantly as we came up to about that 70,000 level and got rejected for psychological resistance. If we retest that, it is possible that we do go higher. If we're able to break 70K, we definitely need to watch from there for what's happening around 72,000. And then that could also be where we take a little bit of a breather, a little bit of a rest. And should we be able to break that, then to me, if we get above 72,000, a full candle close above that, regardless of how small, I think that could be something that could take us up to the new all-time highs on Bitcoin. That's assuming we're able to keep this trend line support that we have here. And if we get up above this trend line that's descending this way, that could also act as support for us then too, even though it would allow for descending lows over time. So we need to watch for that. So moving over into Enphase, when we look at Enphase, we're barely hanging on to this top trend line that we have right here. And you can see the momentum is sort of petering out a little bit on this over the past few days that we have. And if we go down to the hourly chart on this, well, this is the 4-hour chart, we actually have a little bit of a head and shoulders kind of look to this, which isn't necessarily great for near-term price action. And it is important for where we see that sort of support come in. The neckline for this, by the way, if we sell down to it, is at about 125. So if you see us down below this white trend line here, then look for that support at about 125. Down below 125 could drop us considerably back down to about 120 or so, based on the height of this shoulder that we have to this side, from the top to the bottom of that. So we need to be watchful. 118 has also been a significant area of support and resistance. So should we break down below 125, we can watch for 120 or even 118. If we are able to find this as support and we're able to break over these peaks, that 130 is about where we keep on getting solidly rejected. We have yet to have a full candle close above that. We have some wicks and we had a close above it, but not a full candle close, not an open and a close above it. That's something that has been troublesome for us. And when we go back out to the daily chart to see a little bit more of what I'm talking about, you'll see that if I go 130s right about there, that we just peekabooed above it. We're not able to hold it yet. So 130 is not broken. And so for right now, we're still having that trouble. If we're able to solidly get above and hold on to 130, then we can start hitting these price targets that I have up here of 138.49 and 150. So that actually looks kind of like a nice little smiley face. By the way, Bitcoin, you may have seen this on the screen, a little bit of an Easter egg for you. Did you look at the daily chart at the RSI? You actually have like a Batman kind of looking figure in here. And I remarked about it at a meeting with one of my Discord members, one of my Patreon members, and you actually have a Batman head, the bat wings, and all that kind of stuff on the RSI, on the daily chart for Bitcoin. Check it out and thank me later. So Tesla, still consolidating, still moving sideways, can't quite get over 180 to 183. That's about where we find ourselves right now. We were able to peekaboo up above it. Over here, we had solid candle above and just couldn't hold on to it. And we're just traveling right along the 50 on the RSI as well. So don't have clear indication, bullish or bearish for Tesla. Got to watch for that as well. Weakness for the overall market can be weakness for Tesla. So we got to be watching for that. If the markets are able to push higher from here, if we get favorable economic outcomes in the reports that we see coming out over the next 2 weeks, especially from Jerome Powell, that could be upward pressure for the market. So we want to be watchful for that. Nvidia is this top trend line. That's exactly what we have to watch. We were able to close up a little bit yesterday. We had about almost a 5% gain over the close that we had previously. So what we had for a close before was 11 over here. There we go. And we had 1096 and then yesterday 1150. Awesome. And I still have my price targets on here. I don't have them labeled, but I did talk about it in yesterday's video. You can see the 1250 here and the 1500 there. And this might happen post-split for us. And then we might also have a little bit of trouble getting there. But to me, getting down near that $1,000 mark, or even below the $1,000 mark, which on a split adjusted basis is at 100 or below $100 per share, starts to set up significant buying opportunities from where we're at right now for Nvidia. You can do so now, but I would rather do it on a de-risked basis. And if that means waiting and missing the boat, such as I have before on Nvidia, well, then that's what it means sometimes. I don't want to FOMO into this. I don't want to jump into this. This is one, like I said, that I'm waiting for that next opportunity to come around, should it come around for us. Now, I told you about 2 bonus stocks, and these I'm actually pretty excited about. So I hope that you stuck around this long, and if you did, consider adding these stocks to your watch list, and maybe you'll see what I see when we look at the technicals for them. So let's put Carvana up there. And so for Carvana, this is a really interesting one when we look at the Fibonacci's for this. So if we actually take the Fibonacci's and do a Fibonacci retracement, and let me stretch this out for you guys so we can really see what's going on here. So we actually dance around the 50% Fibonacci. This is going back into October and in January, February. And you can see in this part right here, we danced around the 50 and then we were able to break above it. And then it came back and retraced a little bit. And then it was off to the markets, off to the races there for the Carvana stock. So let me shrink that down and move it over a little bit for you. And now we're going to take that same Fibonacci and then we're going to, I need that low right there. And we're going to bring it up to this high that's up here. And you can see once again from the previous low that we have here up to this top, we came down, touched the 50, and then went back up from there. So we actually had some significant buying pressure come in when we hit that 50% Fibonacci level. Mind you, we can retrace as low as the 168. But I bring that up because when we look more recently at the near-term price action, yesterday's market put us all the way down to that 50% Fibonacci. Now, mind you, we could come down as low as like 91-ish, so that would actually break us down below the 50-period EMA and SMAs. But if we do break down below, watch for that support to come in. It even puts us back with this previous peak that we had here, so that it would be doubly strong support in my opinion. So we could bounce off the 50, and we could see price action start to retrace a little bit back upward. We'll talk about that in just one moment. Or we could even come down as low as the 61.8. And then if we get signs that we're starting to retrace on that as well, we can head back up. Now, in terms of that retracement, let me get rid of this one. I'll put a new one out. This time we're going to go from top to bottom just to see where we could possibly go based on those 2 levels that I talked about. So bringing from top to bottom on this, we could retrace back up to a price of about $113 per share. That's assuming that we'd be at bottom today, which is right around that 50 EMA, or if we come down to the 50 SMA, it still puts about 112. Now the 61.8 was all the way down here at about $91-ish per share. So if that's how low we come down on this, that puts the 50 at about 110. So 110 to 130 would actually be decent retracement with other resistance levels that would be up above as well. 100 as a round number resistance for us is also significant as well. Plus, that's also near those 50-period moving averages. So we're going to keep an eyeball on that. But I do think that Carvana will start to retrace. Plus, if we get rid of the Fibonacci's themselves and take a look at trend lines for this one, let me grab this ray right here and we'll click there. And this one's not perfect. Now, mind you, this also makes me think that we could sell down a little further, because if we do, that 91-ish dollars would hit right about on this trend line. Maybe that should be a little bit farther south, but might not necessarily be perfect. But certainly as soon as we get down into those 91 to high 80s, you can see all across here where we peaked out before for resistance. We could also find support right around there. So watch those levels for Carvana, that if we continue to sell from here, watch to see where we start to get those signs of turning around on the candles that you get, on the momentum that you get. Right now, it is a falling knife, but it is possible that we see that turnaround sometime soon, and that could give significant potential for some upside appreciation for Carvana. If we are able to break down through those levels, then we can sell down and we could see something like $70 per share come out again. Now, mind you, I think that would be paired with overall weakness for autos in general, for auto sales. So moving on from there, the last bonus I have for you for this video anyway is American Airlines. And you'll see that, man, oh man, things dumped off. Not really great news for ticket prices for American Airlines or airline stocks in general. Now for this one, this is one that I went out on a limb with a high risk play for a significant bounce from here. And yesterday, I was actually up about 30% within a few minutes. I hung on a little bit because I think that this one could actually push us up to about the bottom of this candle that we have over here, that this could put us up close to $12.50 to $13 per share is where this thing could bounce. And why off this trend line down here? Well, this is why I went out on a limb for it. Let's go to a weekly basis, and we're going to zoom way out on this. We might have had to go monthly on this one. Nope, we're good. We got it all on here. So what we're looking at all the way back here, this is June, July of 2008. So this goes all the way back to the Great Recession on American Airlines. And then we were able to bounce off of that. And then here we confirmed support. And then over here in November of 2011, we touched support again. Then during pandemic, we came down to this low again. And then also between October and November of last year, we came down to this support again. Now, mind you, this doesn't mean that support is going to hold. But what we do know is that this is a really critically important trend line that we're looking at. And so for this could also be where we find some more bounces come in for us, even if they're not as substantial as we saw the last time. So I went pretty far out on a limb with this with a pretty aggressive call option that I think could pay off if support holds. If support does not hold, well, if we see signs of it actually continuing to sell down and we get further sell pressure and break down through that trend line, we could be looking at horizontal supports instead for where that next support comes in, whether it's at $10 itself or if it is all the way down to what we saw for the pandemic low, which is around between $8 and $9 per share. The low 8s, as a matter of fact, is what I see for the lowest candle that's here. So those are some thoughts on American Airlines. We could take a significant bounce in the very short term. The trend is bearish, so that's one that I wouldn't necessarily say that we'd want to hold on to for a long time, because that's against what we have. So we could see a little pop up. It could be quick, it could be momentary, and then we could see it sell back down. Now, mind you, again, hugely important trend line, and I went out on a limb because of the history of this trend line and just how much support we've found there in the past. And we'll see if lightning should happen to strike for, I don't know, 1, 2, 3, 4, 5, 6, the 7th time, and we're able to find some more support here that gives us that significant bounce. All right, guys. I'm going to wrap this thing up. So for the markets themselves, we're stuck in between two places right now. One is the Fed interest rate cuts, and the other one is the big old word recession that we were talking about going back to 2023 at the beginning of that, where there's a lot of talk about that. But the thing is, I think that it's starting to get really into the broader market, into the broader, my goodness, I'm blanking on the word, community, just the everyday person. I think recession is on their mind. The price is up as high as they are. People are feeling the economic hardships. And I think it's going to have some reverberance now that it didn't necessarily have at the beginning of 2023. I think it did with the people who were in the markets talking about, hey, things aren't necessarily great. This could lead somewhere bad. And I think it's starting to show us that it's starting to lead somewhere bad. And I think it's starting to make its way into the mouths of the lay person who's out there, the common person who's out there, who doesn't necessarily follow the financial markets. They're just a regular person living their lives who doesn't really care one way or the other about the stock market itself. And I think from that, there could be some real power for what we see and the implications if people start moving towards frugality. So we're going to be watchful for that as well. And that could also be something, by the way, that leads into a flight to safety at some point. Maybe we start to see those bond prices continue to appreciate from where they're at right now. Anyway, I'm going to let you guys go. As always, if you want to see my buys and sells, down in the description, there's a link for the Patreon. Click that, sign up, head on over to the Discord. My buys and sells are over there. My community's there. Talk with me, talk with the other community members. And then also there's a link for a technical analysis trading course in the description as well. You can click that, learn to do technical analysis like I do, and take your trading game to the next level. I really do appreciate your time. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.